Hello, I'm Kensuswa. Now I will present introduction part. For introduction part, International Business Machine IBM Corporation, a global technology leader headquartered in New York. IBM, a global technology leader, is facing a challenging transition period as is try to renew itself amid declining revenue and market share. And then display a rich history of innovations. IBM has reported 10 constituted quarters of revenue decline as 2014 and underperformed in the stock market. The company's traditional hardware business has been impaired, promoting it to diverse it is PC and x86 server divisions to focus on higher margin growth oriented sectors. And then under CEO Bajenier Rumentri, IBM has embarked on an adventure strategy centered around big data and analytics, good promoting and system of engagement for social and mobile technologies. And then this strategy includes substantial investment in cognitive computing expansions of core service and data center, and then development of enterprise mobility solutions in partnership with Apple. However, IBM faced intensive competitions from minorities, gains, and startups, and then the company must successfully navigate this transition while managing the decline of its legacy business, address organizational challenges, uh, and then articulate its visions and restore investor confidence. That's all for introduction part. And then for vision and missions, part, IBM's vision statement not made explicit until 2015 aimed to lead the global market in core computing, big data and analytics, fostering innovation through strategy partnerships and diversity workforce. The mission statement is not explicitly stated, but based on IBM's activities, it can be inferred that the company offers a range of IT services to drive growth and innovations, and they provide comprehensive IT solutions, uh, driving sustainable growth and promoting workplace equality. I think that's all for me. Thank you so much.
Hello, I am Putri and I will continue to explain about the external assessment from the IBM Corporation. So here there are 10 opportunities and 10 threats. So from the 20 external factor, we can highlight the most directly to the recommendation. So from the opportunities, there are three that we can highlight. The first one is expansion in cloud computing. Second one, investment in big data and analytics. And then last but not least, focus on innovation and R&D. From the traits, there are four that we can highlight it to the recommendation. The first one is disappointing Wall Street trend for stock, decline in revenue and earnings, concerning decline in core business or organic sales, and IBM has declining revenues in all its segments. So the opportunities in cloud computing, big data or analytics, and innovation or R&D align with the recommendation to invest heavily in high growth area like cloud computing and AI, accelerate R&D in cognitive computing and Watson AI, and also expand cloud services infrastructure and offerings. The threats around declining revenue, earnings, and core business performance lead to the recommendation to restructure business units for profitability and efficiency, divest underperforming hardware segments, implement cost-cutting measures, and enhance shareholder value through dividends and share buybacks. So, by capitalizing on the growth opportunity in emerging technologies and addressing the financial threats, IBM aims to regain in aims to regain its competitive edge and drive future growth. Alright, so from the internal factor or internal assessment, it's also there are 20 factors here, and the key internal factors that lead most directly to the recommendation are strong brand reputation and patent leadership. It's from the strength, and then leadership in big data and Watson AI capabilities, leadership in cloud services, industry leader in global technology services, invest in cloud computing, big data, and R&D, and then last but not least, increase innovation from 2014 to 2019. And from the weakness, there are 5 points that we can highlight it with the recommendation. The first one is declining revenue and profits, and then shifting customer preferences, large, complex, and lack of organizational structure, decrease in IBM shareholders, and lastly, financial problems. So, the strength in IBM's leadership in emerging technologies like cloud, big data, and AI, as well as its history of innovation, point to the recommendation to accelerate R&D in cognitive computing and Watson AI, expand cloud services infrastructure and offerings, develop IoT platforms and services, and enhance business consulting services with AI integration. The weakness around declining revenue, profit, and financial problems lead to the recommendation to restructure business units for profitability and efficiency, divest underperforming hardware segments, implement cost-cutting measures, and enhance shareholder value through dividends and share buybacks. So, by leveraging its strength in high-growth technologies and addressing its financial weaknesses, IBM aims to regain its competitive edge and drive future growth. That's all from me. Thank you so much.
Assalamu alaikum. My name is Sharifa Umar. So I'm going to talk about the SWOT analysis, matrix analysis, the SWOT matrix analysis of the International Business Machines Corporations Company. So here are the strength and opportunity strategies. Number one, let's start with the beginning. Leverage IBM's strong brand reputation, patent leadership, and expertise in higher end. Utilize the international business machines leadership in big data and waters of the AI capabilities to develop the innovative. Capitalize on international business industry leadership in global technology service to form a strategic invest in R&D and innovation to further strengthen international business machines capabilities in cloud and in big data. Strength and trade strategies. Emphasize the international business brand reputation and patent leadership to differentiate its offering and utilize international business expertise in higher end service and cloud leadership to address declining. Leverage the international business industry leadership and alliance with Apple to navigate the challenge. Invest in R&D and innovation to stay ahead of the IT industry's slow growth rate and higher of the profit. Let's talk about the weakness and opportunity strategies. Develop a clear mission and vision to guide the international business machines diversification into a new service and pursue a strategic partnership and areas to expand the international business market to reach and address the issue. Enhance the workplace equality and diversity to attract and retain the top talent addressing. Invest in cloud computing, big data, and AI to improve the financial performance. Let's continue with weakness and threat strategies. Addressing and declining the revenue and earning by adapting to shifting customer preference and resolving the integration challenge with the with the Apple aims to strengthen the partnership and improve the financial performance and address the legal and illegal concerns around the big data to streamline the organizational structure and decision making to process into improvement. Thank you so much. Here is the end of my part. Thank you. See you next time.
Salam, my name is Sumayyah. I'm here. I'm going to explain the BCG metrics and the IE metrics. In BCG metrics, this planning to help company analyze their two-factor market growth rate and relative market share. BCG here have four divided quadrants. First, we have GBS. Second, we have GTS. We also have software, system technology, and global finance and others as a product from IBM. And from this four quadrant, in this case, GBS division falls into this category is on the sales growth rate 0.18 and a relatively high market share position of 0.56. But cash cows for low growth, high market share, the software and global technology service division are in this category, both having high market share in 1.00 but negative or low growth rate in 0 in minus 0.02 and minus 0.03 respectively. But also in those low growth or low market share, the global finance and others division falls in with zero growth and the lowest market share 0.10 among all divisions. But we also can see here the IBM internal strength or IEFE score appear to be slightly stronger than the external opportunities EFE score. And this suggests that the company has the potential for some growth, but the external environment may not provide significant opportunities for aggressive expansion. But the IBM can implement cost-cutting measures across all divisions as their financial development for covering the potential growth for external expansion. That's all. Thank you.
Assalamu alaikum. My name is Amina Goreng Ahmad and I'm going to talk about the recommendations. IBM is undergoing a significant strategic shift to ensure long-term profitability and growth. This plan includes 10 key recommendations that we have here with a total investment of $16,450 over the next 3 years. Let's dive into this recommendation and understand the reasoning behind them. Streamlining operations, we have restructuring, cost cutting, to free up resources and improve efficiency, and the expected cost here is $1 million. Exit underperforming hardware to focus on high growth areas like cloud and AI, and the cost will be $350. Cloud and AI are booming. That is why we recommend to invest $3.7 million in R&D, partnership or acquisition to capitalize on this trend. Accelerating R&D in cutting-edge AI like Watson with a $3 million investment to gain a competitive edge. Expand cloud service by building data centers and attracting new customers. And the investment will be $2.4 million. Developing IoT platform and services to be a leader in this rapidly growing market, and the cost will be $1.2 million. In conclusion, this $16,450 $50 investment will streamline operations, position IBM for future growth, and create value for everyone.
Salam, this is Sumayyah. Now I'm gonna explain about EPS or EBIT analysis. So from the graph, the cost of debt financing shows a gradual decline over the 4-year span, starting at its highest point in year one and steadily declining in the following years. The graph also shows the cost of debt financing inconsistently lower than the cost of common stock financing over all 4 years. The cost of common stock financing is relatively flat through the period, showing a slight decrease between year one, year two, and before stabilizing. And this, while increasing revenue growth through higher sales volume, pricing adjustment, or new product or service launch can be implemented more effective way to reduce costs, include cutting unnecessary expenses, negotiating better supplier deals, or improving efficiency, and buying back stock to reduce the number of shares outstanding for the company.
Assalamu alaikum warahmatullahi ta'ala wabarakatuh. And my name is Abdurrahman Abdurrashid Mahmoud. And today I would like to present my parties from the strategic management report, and which is started from the financial statement. So, during the time that we was doing like the financial statement for the IBM company, which is like International Business Machine Corporation, the revenue that they make during like 2013, at the end of 2013 was like 98 million and $367,000, compared to like that the revenue that they make at the end of like 2014 was 92 million and $793,000. And the cost of goods that they sold will be like the revenue was 49 million $683,000, compared to like 2014. At the end of 2014 was like 46 million 38 $386,000. So if you look for the percentage on the slide, you can see for the revenue, but 6%, mainly 6%, the company was like the company lost and around 6% of his revenue for 2014 and up to 2013. So if you calculate at that part, you get like the company lost like 6%. And if you look for the cost of goods, how many percent that the company lost, it will be like mainly 7%. The only time that the company like increase was like the interest expenses. Compare, like if you compare the 2 years, you can see from here like the interest will be like for 2013 will be $402 million, and compared to like 2014 will be like $484 million. And the percentage that the increase will be like 20%. So moving to the next slide, which will be like the balance sheet will be like 20%. So moving to the next slide, which will be like the balance sheet of the company, IBM company. And if you look closely for the balance sheet, if you look the part of the asset, you will see the cash, short-term investment, account receivable, inventory, and other current assets. And if you see for the cash, short-term investment, you will see like the revenue that they make will be 11 million and $666,000. And if you see the percentage that they lost during like these 2 years, 2013 and 2014, the percentage that they lost will be like minus 23. And the only time that the asset increase will be the other current asset. So the revenue for 2013 for the current asset, the other current asset will be like 6,138,000, and 2014 will be $7,012,000, and the percentage that the increase will be 14%. If you look closely for the liabilities, you will see we have account payable, other current liability, total current liability, long-term debt, other long-term debt, and total liabilities. For this part liabilities, around 4 parties will increase while other 2 parties will decreased. And if you look closely for the equity, you see the common stock, retained earnings, treasury stock, paid in capital, and other, and last but not least, total equity. So for this equity part, the equity part contains 5 parts. 4 of them has increased while 1% one of them like decreased. The one that decreased will be the total equity that we have, the overall equity of the company. The revenue that they make during 2013 was 22,929,000, compared to 2014, which will be 12,014,100. And the percentage that they decreased will be minus 48%. I think that's all from me. Thank you so much for your listening, and I hope you understand something about like about the balance sheet or for the financial statement of the ABM company.
In the conclusion of our project, IBM faces a crucial junction despite its leadership in big data and AI. Revenue decline in core business and intense competition in emerging sectors pose significant challenges. Financial analysis reveals concerning trends, including projected and negative cash flows and a weakening balance sheet. However, IBM maintains healthy profit margins and strategic investment in high growth areas like cloud computing and AI. Our analysis recommend a multifaceted approach mirroring IBM's plan. We have restructuring business unit, divesting underperforming segment, accelerating R&D in cognitive computing and AI, etc. Successful execution of the strategic realignment with focused investment in emerging technologies is crucial for IBM to regain its competitive edge and ensure future growth. Thank you very much, and this is all from us.